let me ask your opinion on something that's related though. So I was reading
Sure.
something on LinkedIn this morning, a post about how, you know, there's really a strong correlation between bank lending and unemployment, right? And
Okay.
there's always a
Hmm.
lag time, but the correlation is really strong. So with banks now pulling back because of interest raises
Hmm.
and stuff like that, are we going to see unemployment start to spike in the latter half of the year as some people are predicting? So I'm wondering, what you think. I can, you know, I'm not enough of like an economic historian. I mean, not at all an economic historian. I don't want to oversell that at all. I do follow things, but I'm not an expert. But I wonder, this situation where banks are pulling back from lending, at
Hmm.
least in the real estate space, it's hard. It's a chicken and egg kind of thing, right? Because, we're going to talk about price discovery in one of the
Hmm.
later segments, but deals are not happening right now because, borrowers don't want to pay as much as sellers want to get paid. So is it that the banks aren't lending, or is it the banks have nobody to lend to, right? And so at
Hmm.
least in the real estate space, that's what we're seeing. Could be that for the rest of the economy, people are not, the banks are skittish and not lending on business because they're worried. But at least in real estate, that's is it because banks aren't lending or because people aren't borrowing, right? So we don't know. And then if that's depending on what it is, it could. I wonder. I'm just asking the question: does it have an effect? Do you still
Yeah,
see that?
there's no question, historically speaking, that lending is the oil of the economy or lubricant or whatever you want to call it. And if you track lending volume, right, total dollars, you can generally make a connection. It's lagging, obviously, but there's without question a correlation. So,
Yeah.
um, the other thing, right, because again, I do watch this stuff every day. I don't know if you're aware of this, but Monday of this week was a big day. We actually had 7 bankruptcies filed on Monday.
Mm.
Some of these companies had billion-dollar valuations, 12 or 18 months ago, and now they're bankrupt. All of them went bankrupt for one of two reasons. One, they had a term debt coming due that they couldn't pay,
Yeah.
or two, they were trying to raise capital and they couldn't get terms, so they just ran out of money. So it's not only real estate
Yeah.
not having transactions, but you're seeing, frankly, um, dead bodies, which are corporations that were held down by free money,
Yeah.
rise to the top now when these are cut out. So that will certainly lead to unemployment rising. The word that we have to define, because I'm not sure I agree or disagree yet, is spike.
Mm.
What does spike mean, right? The last unemployment reading was 3.4%.
Yeah.
And if we put an end date of the end of the year, let's call it December 31st or January 1st, 2024. If you tell me unemployment's 4.5 or 4.6 by the end of the year, I'd say, yeah, that's probably pretty likely. If you
Mm.
wanted to tell me it was 6% or 7%, like some of these people are screaming, there's almost no chance it spikes that fast this soon. There's such a lag effect that any real spike would be kind of middle of next year.
Right.
There's just the lag is too far out. So that's how I kind of look at it. There is a connection for sure, or correlation.
I mean, it's funny because some of the stuff, people was reading today, like, 2 million people could be thrown out of work as a result of, the what's going on right now. And sort of, well, I mean, 2 million, obviously, that's a lot of pain for those 2 million people, right? But in the size of our economy, 2 million people is not that
Well,
much,
let's
right?
let's also talk about that because again, we were in an interesting time. Last reading, I think the JOLTS report had 9.4 million job openings.
Yeah.
So I've run companies, or not. I have been a second line at companies, and first thing we're going to do is whack job openings,
Yeah.
right? So again, okay, so we head into the bad times. That 9.4 could easily be 6.7 by the end of the year. That's 3 million jobs gone. But is
Right.
it really? Is it really 3 million jobs gone? I mean, really? Yeah. So there's you got to watch these numbers.